It's the last one for the year. Thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwagu. Today on the show, Nigerian equities market set to finish the year bullish. Oil set for 20% drop in 2020 as lockdown weighs. And a review of African environment in 2020. First, let's look at the market numbers. It's half day for global markets today as 2020 gradually comes to an end. And here in Africa, the Nigerian Stock Exchange is winning, racing to close the year on 40,000 mark. The index was up 1.15% at intraday. The South African JSE index was in the red. Meanwhile, the EGX 30 in Egypt was also negative, though marginally. The Nairobi Stock Exchange closed positive on Wednesday. In the meantime, it was a sea of red in the Middle East as all the indices looked set to close the year negative. The Abu Dhabi index was down 0.84%, while Dubai traded 1.03% lower. The Qatari index was down 0.94%, and the Saudi Arabian market traded at 0.21% negative. And European markets were lower on Thursday, the final trading day of a year dominated by the coronavirus pandemic and extraordinary stimulus measures that have tried to mitigate the economic hit from the health crisis. The Pan-European Stocks 600 index was 0.3% lower on New Year's Eve, with all sectors in negative territory apart from the retail sector. Year to date, the Stoxx 600 index is down 3.7%. However, it is up nearly 11% for the quarter. All European markets will likely end 2020 on a somber note following lackluster end-of-year trade in Asia and with U.S. stock futures largely flat early Thursday morning. All markets in Europe will close early on Thursday by 1 p.m. London time. Meanwhile, after a highly volatile year, Britain's FTSE 100 share index is set to be on track for its worst year since the financial crisis 12 years ago and the worst performance of any of the big share indices. Let's bring in Juliana now. Hello, Juliana. Good afternoon. Well, while global stock markets have bounced back from steep drops in March, the FTSE 100 looks set for its worst year. The index made a bad start this morning. Meanwhile, the pound hit 31-month high against the dollar. What's the update on the numbers this intraday?
Well, it's been a miserable year, hasn't it, Chimeze? A miserable year for the FTSE, a miserable year for the wider economy. And even though we had some pretty recorded high gains earlier this week, they've all been dissipated as everyone is looking now to 2021. So the fact that we've got triple-digit losses on the final day of trading pretty much sums up 2020. The FTSE All-Share is down 1.34%. The FTSE 100 is down by 1.43%, and the FTSE 250 is down by 0.95%. In currencies, as you said, the British pound riding high against the US dollar, up by 0.28%, also up on the euro by 0.42%, and up on the Japanese yen by 0.13%. The final trading figures for 2020.
So who are the winners and losers in 2020?
Good. That's such a big question. 2020 is clearly the year where everything has changed. And I think the COVID-19 pandemic is going to be seen as the turning point. But as economists would say, it's going to take quite a long time for us to see really just how significant these changes are going to be going into the future. I think typically most people talk about the big tech giants surging. Zoom, I spoke this morning to Bissy about Zoom fatigue, which really has become an ailment, a genuine ailment this year. And of course, Amazon has done incredibly well. But some retailers, especially here in the UK, who spoke about the big stalwarts like Arcadia and Debenhams and the entire industry, of course, and aviation, they haven't done well too. But I think it's really important that we remember individuals. You know, if you think about it, children have really suffered this year, not just in the UK, but across the world. I think the latest figures from the UN is that this pandemic would push 200 million people into poverty. You know, those people who are very, very poor, many of them have children, and so many of them have lost out on education this year. A big topic of conversation at the moment here in the UK is what is going to happen to school children in 2021. And many of these school children are lucky enough to have laptops and mobile phones, but some of them don't. And this is in the West. What about in the global South? It's important to mention them. Another big loser that I think it's important to mention as well is race. I know a lot of our viewers, especially those of us that have relatives back home, may sometimes believe that, you know, the West is made of milk and honey. And I kid you not, it isn't. Race has been a massive talking point. There have been so many disparities, not just here in the UK, but in the US. We found out that a lot of our workers, especially those that are undocumented and have been working on the front line, many of them lost their lives untimely because they were putting themselves right in the front and centre of the COVID battle. So yes, of course, we are business correspondents, so it's always good to talk about the companies. But behind the companies, there are millions and millions of people across the world that have suffered due to COVID-19. And unfortunately, it's likely to go that way for the next couple of months as the world turns its head and unviable positions disappear.
Well, with the vaccines on the horizon, perhaps there's some kind of optimism there. All right, by midnight, Brexit deal takes effect. What's the feel like counting down?
Well, midnight Nigeria time, but in the UK, legally, it's 11 p.m. That's when the Brexit transition period finally comes to an end. It's really difficult to judge the mood because, of course, at the moment, we're not really talking with one another. We're tweeting, we're Instagramming, WhatsApping. But in terms of real conversations, I've got to tell you that Brexit really isn't at the top of people's minds. It is for government, it is for commentators like us, but not for ordinary people. But it has been 4.5 years of tense discussions. There's been mass political feuds, family fallouts, friendships have disappeared. Some of the old, archaic race tensions that many people would know were apparent in Britain have reached the surface yet again. So I think for many of us, we hope that this transition period, this dong that's going to happen at 11 p.m. local time, will be the end of this this really horrible period. But sadly, we know that's likely not to be the case. I think Brexit talks and Brexit discussion and this whole messy divorce will be a topic for many, many months to come. But at least, you know, there's finally been a line drawn under this entire period. And again, to quote Prime Minister Boris Johnson, the populist Conservative leader of the Tory party, Britain will be opening a new chapter.
Well, Juliana, yes, we talked in the morning. What can I say? Just to wish you a happy new year. I'm not here tomorrow, but you'll be here with BC. So happy new year.
Happy New Year, Chimezie.
And shares in Asia Pacific were mixed today as multiple markets in the region closed early for New Year's Eve. Mainland Chinese stocks surged on the day. The Shanghai Composite climbed 1.72% to 3,473.07, while the Shenzhen Component gained 1.895% to 14,470 points. The Hang Seng Index in Hong Kong advanced 0.31%. In Australia, the S&P ASX 200 slipped 1.43% to 6,587.10. Markets in Australia, Singapore and Hong Kong closed earlier than usual on Thursday due to New Year's Eve. Markets in Japan and South Korea were closed on Thursday for a holiday. And U.S. stock futures were largely flat early Thursday morning as Wall Street prepared for the final day of the year. Futures tied to the Dow Jones Industrial Average were down. Those for the S&P 500 and the Nasdaq 100 were also little changed. The muted move in futures comes at the end of a relatively quiet week on Wall Street, capping a remarkable year for the stock market. Equities fell sharply in February and March as the COVID pandemic spread outside of China. The S&P 500 suffered its most rapid 30% drawdown on record. Ahead of the final session of 2020, the tech-heavy Nasdaq Composite gained 43.44% year to date, while the S&P 500 and Dow rose 15.52% and 6.56% each. Our investors will get a key piece of economic data on Thursday morning with the latest report on initial jobless claims. Economies are expecting 828,000 initial claims, which will be a slight increase from the previous reading and still drastically higher than before the pandemic. All right, let's look at the global oil market as the prices there lost about a fifth of their value in 2020 as strict coronavirus lockdowns paralyzed much of the global economy, but prices have rebounded strongly from their lows as governments rolled out more stimulus. Now, the last trading day of 2020, Brent was trading down 18 cents at $51.45 a barrel, and U.S. West Texas Intermediate lost 0.1% to $48.35 a barrel. Brent and WTI have more than doubled from decade lows seen in April, putting past a year which marked the first negative prices for WTI that shocked investors globally. In the short term, concerns over coronavirus lockdowns are likely to cap gains. A new variant of the virus in the United Kingdom has led to the reimposition of movement restrictions, hitting near-term demand and weighing on prices, while hospitalizations and infections have surged in parts of Europe and Africa. A January 4 meeting of the Organization of the Petroleum Exporting Countries and Allies, including Russia, a group known as OPEC Plus, is set to boost output by 500,000 barrels per day in January. And gold edged higher, heading for its best year in a decade as a weaker U.S. dollar outweighed pressure from a top Republican lawmaker's remark that a bill to increase U.S. pandemic aid checks was unlikely to get Senate approval soon. Spot gold rose 0.1% to $1,894 per ounce. U.S. gold futures climbed 0.3% to $1,899. Gold has risen more than 24% this year, its best since 2010, as unprecedented stimulus measures and low interest rates to cushion economies from the pandemic blows boosted the non-yielding metals' appeal as an inflation hedge and a safe haven. In other metals, silver fell 0.3% to $26.54 an ounce. Platinum gained 0.1% to $1,066, and palladium was up 0.2% at $2,366. And when we come back, domestic commodities market update is next. On commodities market today, we are looking at cocoa. Cocoa, we know, is Nigeria's major agri-export commodity, with the country being the world's fifth largest producer of the commodity. Cocoa prices have declined by 11%. So what will this mean for Nigeria? Let's talk to Dumebi Iyeke, research analyst with Financial Derivatives Company. Hello, Dumebi. Good afternoon.
Hi, good afternoon.
Now, the main crop harvest for cocoa beans in Nigeria is November and December. So what do you think will be the impact of this 11% decline in the price of cocoa be on Nigeria's fragile forex situation and, of course, the fortunes of farmers in the Southwest?
Most likely, with the decline in the global price of cocoa, this would have a negative impact on Nigeria's exports revenue. And this simply means limited forex supply. And coupled with the increase in forex demand, we could see, the naira depreciate further as a result of this. And at the same time, the CBN, in response, would want to, support the naira, but because of the limited forex, supply that would have due to the decline in global cocoa prices. The CBN could now resort to the external reserves, and this would, further weaken the economy's buffers. And for the farmers, this just simply means lower income for them. And what we could likely see them do in response is an increase in crop rotation in favor of other agricultural commodities that would boost their income levels, immediately. Because at the same time, we're not only looking at a decline in their income levels, but also a decline in their standard of living. So that's the impact that this could likely have on Nigeria's, forex situation and farmers.
Now, after crude oil, natural gas and sesame seeds, raw cocoa beans are the top revenue sources for export earnings. Now that there is a resurgence of COVID cases in top chocolate-consuming countries, what is your outlook on global cocoa prices? How will this affect Nigeria?
Generally, of all the refined products from cocoa beans, chocolate is number one. And once there is, a shock in any of the top consuming chocolate countries like the US, there would be, a significant impact on the global cocoa prices. And that's exactly what we're seeing currently in the global prices for cocoa right now. And generally, if this trend continues, global cocoa prices could decline. We could see a repeat of what happened, in Q2 2020 when global cocoa prices declined significantly. And the impact of this on Nigeria would be the same. There would be a significant hit to Nigeria's export revenue, and this we know would affect, the government's ability to implement the budget and, generally keep the naira stable for the CBN.
Now, Ghana and Ivory Coast have formed a producer cartel of cocoa exporters. Do you think that Nigeria should join this cartel? And how successful do you think they will be in controlling prices and supply in 2021?
I mean, the first thing that we would need to look at is the fact that, number one, Ghana and Ivory Coast are, they account for at least 50% of global cocoa output. They account for over 50%, of global cocoa output. And at the same time, the reason for them making this decision to create this cartel in the first place is, number one, to have control of global cocoa supply and to be able to, control prices. And number two, which is very significant, is to ensure an increase in the living, standards of cocoa farmers. Generally, so far, we haven't seen that, be very successful. And for Nigeria, in my opinion, I think before we can have the conversation about Nigeria joining the cartel, there has to be a significant boost in Nigeria's, current cocoa output from what it is now, which is about 250,000 metric tons to at least, 1 million. And that is because Nigeria will be able to comfortably, compete with Ivory Coast and Ghana. That's number one. Number two, the challenges affecting cocoa production need to be addressed significantly. And number three, there has to be a boost in the value chain for cocoa production before we can start having talks about Nigeria, being a part of the cartel. And for the success of the cartel, in my opinion, I think that if at least the top five, countries, top five cocoa producing countries are a part of the cartel, we could see a significant success in them controlling prices and, them controlling the price of, cocoa and, global supply of cocoa in the global market.
All right, thank you very much, Dumebi. It's been a great year working with you guys at FDC, and we hope and look forward for a more prosperous 2021. Happy New Year to you, Dumebi.
Thank you so much. Happy New Year to you too.
Thank you. Nigerian environmentalists and recyclers are battling a rising tide of electronic waste, some of which contains toxic materials. The country generates hundreds of thousands of tons of electronic waste annually, the bulk of which is imported as used electronics. The amount is growing, driven by a rapid population growth and a higher turnover of appliances than in wealthier countries.
Several shipping containers arrive in Nigeria every day, most filled with non-tested second-hand electronic appliances that are often dead on arrival. Most of these appliances are discarded fridges, desktop monitors, CD players, or air conditioners shipped in from Europe, with no guarantee for both the importers and buyers ever using them, yet they continue to bring them in. It was a rainy day in Lagos, and Chika Odiri Michael had just offloaded a container full of such electronic appliances. His warehouse is full of ready buyers and scavengers who will either buy these off him or take away the numerous appliances that are obviously not ever going to be used.
Apart from the exchange rates, and the exchange is too high, most of the goods we bring, we cannot even sell them, and most of them are waste. So it's excess loose this time around.
A report published in June 2020 by the UN's Global E-Waste Monitor, global e-waste has surged up by 21% in just 5 years, with a record 53.6 million metric tons of electronic waste generated worldwide in 2019. A new report also predicts global e-waste will reach 74 million metric tons by 2030, almost a doubling of e-waste in just 16 years. And this makes e-waste the world's fastest growing domestic waste stream, fueled mainly by higher consumption rates of electric and electronic equipment, short life cycles, and a few options for repair. Some recyclers and environmentalists are now pushing against these imports and enlightening the masses and scavengers on the toxicity levels and impacts of not properly disposing of these appliances.
From the start of this country, we haven't had really any answer for the electronic waste that we produce. Talk less of the electronic waste that gets dumped on us from outside, because we are importers of electronic goods. We're supposed to be refurbishable, but they turn out, the majority of them turn out to be dead, turn out to be e-waste that needs to be sent back abroad to be refined.
It is common in Nigeria to see stalls selling worn-out second-hand appliances, commonly referred to as tokumbo, a Yoruba word that means from abroad. Traders also often cut open these items, mostly looking out for gold and copper parts, oblivious of the fact that the mercury and lead found in e-waste could harm their health.
We're putting the profit above the people. We're putting gain above the common good, and it's not acceptable. There has to be fundamental changes. Hopefully this whole COVID issue will help us to become aware that, nature is a force that must be harmonized, that must even be cared for.
Ochonogo's factory has a capacity to handle 10 tons of e-waste a month, a far cry from what the country generates.
And that's it on the program for the year. Happy New Year.